Okay, folks, welcome to a new week and welcome to Market Wrap. Let's begin the week off with the 10-year yield. How did we open up this week? And we opened up flat, which is a good sign because last week we pulled back from the highs of the week, formed a topping tail. The last thing that we want to see are yields head higher right now with commodity prices moving lower. Now, if commodity prices were moving higher, which implies inflation and interest rates moving higher as well, then our trades in silver and the gold mining names would be doing well, but that's just not the case right now. So let's take a look at the US dollar because it will influence the direction of commodities. And after a really, really nice Friday, I mean, what a big day on Friday. No follow through, good sign. Yes, it did close off the lows of the day. It did close above the 50-day moving average. Would I have liked to have seen it close at the lows of the day and below the 50-day moving average? No doubt about it. Let's take a quick look at the UUP. After a very nice Friday, it gapped down today. Yes, it did fill the gap from the September 14 highs of the day and rallied back to close off the lows of the day, but still down a quarter of a percentage point. But what I really like was the volume. Big volume. Intraday chart. Let's go with a 15-minute. Now, a lot of that volume came in the back half of the day, so we need to be honest with ourselves. Good reversal candlestick at the close. But still, I'm not all that impressed by the price action on the UUP. There should have been follow-through today, and we didn't get it. And what does tomorrow's price action and today's price action really mean for the most part? Nothing. Because it's all going to change after the Federal Reserve announcement on Wednesday. Now, the odds are going lower and lower that the Federal Reserve is going to hike rates. No shock. The question is, how hawkish, if any, will they be in their comments with regard to forward-looking guidance? And it's all about that guidance. Now, what I'm hoping for is that we get comments out of the Japanese Central Bank and the EU, which is somewhat hawkish, which will require the Federal Reserve to be a little bit more reserved in their comments, because if the EU and Japan are hawkish in their comments, that means the dollar is going to rally, and that means weakness for oil. And as goes oil of late, so goes the market. So they're going to want to keep oil propped up. The last thing they want is the dollar surging, which is good for our positions. Let's get to the other charts. Transports. Reversal day, not a bearish key reversal because it did close up a quarter of a percentage point, a little higher than that. Volume was light. NASDAQ comp, bearish key reversal today, and it closed right at support. S&P 500, bearish key reversal, closed above support. Volume light. IWM, lots of topping action today. Volume light to the upside. Intraday chart. Let's go with a 30-minute. So it gapped higher at the open, pulled back, filled the gap. Then they tried to rally it into the afternoon, but no such luck. I'll tell you, these markets are on really, really thin ice. The bank's up today, almost a percentage point. Let's go to a daily chart. This is a weekly chart. We saw a lot of these types of candlesticks today, folks. Hollow candlesticks, a sign of indecision. I'm more concerned about them at tops rather than at intermediate bottoms. Volume below average on the banks. The VIX bounced off of 14.60 today. Closed off the highs of the day. The VIX may be poised to move higher. Take note of this RSI hooking up. Let's talk positions. Platinum Metals Group was up considerably, gave up most of its gains today. Higher low getting put in on RSI. Volume rose, but still below average. Breaking out on Stoch RSI. Higher low on stochastics. My son owns this, as do I. So I'm hoping that this moves higher. MACD, very, very mature MACD. I think the bias is to the upside here. USLV moved higher today by almost 6%. Nice, but I don't want to add more until we get a Federal Reserve decision. And I want to take a look at the market's reaction. So I didn't want to buy into a rally today. Volume is below average. We're putting in higher lows on the indicators. Good stuff. Higher lows all over the place. It's exactly what you want to see. So USLV is looking good. And yes, I'll point out hollow candlestick. Yes, it bothers me, but it would bother me more at the top of a trading range. You never want to see them at the top of an intermediate term trading range. At the bottom, it's a different story. Like here, it's a sign of indecision. So if the trend of late has been down and we have a hollow candlestick near the lows, well then it's just a tug of war between bulls and bears. That's all. And a lot of people just want to sit on their hands. They're going to take some money off the table. They had an opportunity to sell today, and they did ahead of the Federal Reserve. No shock. Nugget, same thing here. Up 1.54%. It was up over 19 at one point in time today. Volume was very, very light. But as we saw with silver, we're seeing higher lows get put in on the ultimate oscillator. How's our RSI? Higher low. Higher low on stochastics. MACD looking very attractive, similar to the PLG. Very mature. BRZU, no shock. Hollow candlestick. No time to go adding to these positions yet, folks. Yang, our short of China, pulled back today, retesting the breakout point. Good stuff. Very light down volume. No breakout yet on Ultimate Oscillator. We're pulling back on slow Stokes to retest the breakout point. How's our RSI? Doing the same as the Stokes. Pulling back, retesting. Tilly's moved higher again today. You know, I had a conversation with my daughter. She came home with shoes. I asked her where she got them from, and it was Tilly's all day long. She loves the store. So it's all the rave with the kids. So what we're going to do here is that we're not going to add any more until we get a bearish key reversal. What's a bearish key reversal for new members? This is a bearish key reversal. This is a bearish key reversal. We want to rally higher and then reverse the close lower on the day. That's when we'll become extremely aggressive to the short side. I think our position right now is good. I'm satisfied with it. I won't get upset if we continue higher a bit longer, but at the 10.90 level, let's go to the weekly chart. The 10.90 level is a historic resistance level last seen back here the week of February the 3rd, 2014. So we're closing in on that level. Two-hour chart. The 2-hour chart is still looking healthy. Probable lower high getting put in on MACD, which is a good sign. We're very extended here, very overbought. So I feel confident in the position. We're going to stay short and look to add more. Okay, NetApp. Rallied today up and into our buy price, our short price, where we were looking to get involved. The problem for me right now is this. The reason why I don't want to add more is that we aren't as overbought as we were. So we may still see some upside move here. But I like the fact that we backed off of that historical resistance level and today flashed a topping tail. Let's go to the 2-hour chart. Yeah, nice breakout. Started to pull back mid-afternoon. I'm not ready to add here yet. I would rather add back to the daily chart on a break back down into this trading range, because if we get a break down back below 35 and we close there, we're going to 34. If we go to 34, the probability is that we will break 34 and move lower. So that would have me more excited than fighting the shares if they manage to, back to the weekly chart, if they manage to close above $36 per share. You have a lot of resistance above here, so it's not going to be easy for the shares to just simply break out and through, especially with volume not all that impressive. And that's it for tonight, folks. Everybody have a great night. I'll talk to you tomorrow. Be well.